Ladies and gentlemen, are you ready for the first edition of the Solver Games? I take that as a yes. All right, the next panel is the Solver Games. Guys, good luck, have fun.
Thank you. Test. Test. Can you hear me? Test. All right, we're on. Welcome, everybody. Thank you for coming. I would say, number one, it's an honor and a privilege to be up here with all these esteemed colleagues who are operators and have done a ton of work in the Ethereum and other ecosystems in terms of solving and MEV-related activities. So I think we're going to have a really great panel. If you guys could just kind of go through, maybe say who you are, what project you're working on, and how it relates to solving.
I'm Nathan. I'm currently working on a high-speed prediction market, but in the past I've been a block builder, I've been a solver, and I've launched a couple of crypto exchanges.
Thank you. Hi, I'm Kata. I'm working on Bebop, which is sort of a dual intent-based execution system. So we both have professional market makers RFQ, and we run a solver auction in parallel.
Hey, I'm Taker. I'm one of the co-founders of Aori, which facilitates high-frequency trading for searchers, solvers, market makers, centralized exchange, centralized exchange trading firms and whatnot. Pretty much most of you might know me from actually running search.dev. Pretty much my background previously was at various different sort of MEV shops and whatnot, to then eventually starting to build protocols and tooling essentially for searchers and really just helping that essentially that sort of market grow essentially. So yeah, excited.
Hey, I'm Markus, founder of PropellerHeads, and we basically are building solvers and solver infrastructure, which just means that we connect to all the liquidity sources out there and make sure that you can access them through any intent infrastructure easily. And get trades routed optimally. And now we're also building products on top of these solvers, one of them being a new type of exchange that we'll talk more about this week. My background is maths and AI, worked in that field for quite a while, and then got nerd sniped by doing MEV backgrounding for protocols, starting with stablecoins, and then that led into solving, where we are today.
Hi, my name is Vishwa, co-founder and CEO at Anera. Way less accomplished compared to everyone here. Patrick threw me a last minute, like a dog gets a bone. I picked it up. We do the type of solving which is cross-chain but isn't stat-arb. So we're filling a lot of these cross-chain intents, which looks a lot like market making. We're also building a shared liquidity primitive on top to sort of democratize access to that liquidity for solvers that have historically been single domain to now go cross domain as this universe of blockchains thesis continues to evolve. My previous experiences are TradFi buy side, and then had a couple of entrepreneurial experiences in traditional finance lending, and then weirdly enough, stuff to do with film and NFTs, but I don't talk about that anymore.
Well, that's great. Now that everybody has got to know our panelists, I figured we start the questions maybe with first principles question, because we use the term solver a lot, and not everybody understands necessarily what it means or what we mean by that in that context. So one definition is I took from the recent paper, Intent-Based Markets. Solvers are agents who compete to satisfy user orders, which may include complicated user-specified conditions. Do we agree with this definition? Is there anything else that you might add?
I think there's a lot of definitions you can give with different levels of granularity. At some level, validators and miners are solvers in that they compete for the rewards that consensus offers. I think that a more useful definition is probably self-interested actors who are financially incentivized and rewarded for their participation in optimization markets. That's sort of like a definition that encompasses usefully what we consider to be solving.
Yeah, I think when it comes to that sort of definition where essentially it's trying to see, trying to satisfy a user's intent, I think very much it's a case in which the sort of, I guess, objective function is something to always think about. Is it the case in which we're trying to, let's say, give back the most rebate to the user? Are we trying to make sure that it clears, their transaction clears very fast, such that they can mint their NFT very quickly? I guess it's very much a case in which, I guess, when you think about it with in a bit more of a general context, that solving can apply to just this sort of general sort of agentic nature of essentially fulfilling that sort of request, as Nathan was hitting on. But that, I guess, the more useful, like, sort of definition of it solving user intents is, which is most generally that sort of general payload that essentially applications and different networks are working with. I think it sort of fits the bill, I'd say.
I'm not sure competition is an essential part of the definition. I'd say it's a mechanism that you trust to outsource an optimization problem to. That mechanism could be not a competition, could be a trusted compute source that computes the optimal outcome for you.
Yeah, I think even on our Telegram group, whenever the definition conversation comes up is when I sort of just disappear. But I do agree with a lot of the points made here, especially I think for solvers to exist in a marketplace, it, in my opinion, should be competitive, and it should be mechanism design that's designed around selfish actors. The only thing that I add there is that it kind of flips the polarity that we've seen with MEV searching, which is, historically it's been PvP, me against the user if I'm a searcher. Here it sort of flips that polarity, and I kind of become a worker for the user here, which I think is a pretty interesting way to take this market structure forward.
Yeah, I think that's a very good point about PvP versus adding something. I mean, in a very broad first principles type of thing, I think a solver is anything or anyone that provides value add, and then that's why they can take the cut and make the business out of it.
I'd add to the point about self-interested. I just think that's important because selfishness is one of the most reliable forces in this universe. That people will always be selfishly acting in their best interest.
I'm sure all the Noma co-founders are turning right now, being like, this is not what we have built this topology for. But all of us here are pretty capitalism maxis, it would appear, and systems that work or put us to work, I think, work really well in the long run.
Those are all really good answers. Very helpful, I think. So now moving forward, what do you think makes a good solver? What types of skill sets are required to enter this marketplace and compete?
I think generally you have to have a passion for execution over impact. I mean, you're not changing the world or making everyone's lives better. You're competing in a highly competitive market. It's the same sort of skill set that would drive someone to be a professional chess or poker player. You just really have to care about really competitive environments and execution plays.
Yeah, I think it's very reminiscent of that of various different sort of trading engineers, people you see doing CT, these sort of capture the flag sort of competitions and whatnot, very much just focused essentially on just optimizing and really, really loving it. Very much optimizing in terms of being able to get more in terms of profits in this case, and also reducing the operating costs, of course. I guess you can also sort of take that and very much make it very, very almost identical to that of this sort of entrepreneurial sort of embrace that a lot of sort of entrepreneurs have, but on steroids essentially. That now that they have this sort of clear goal that they can see essentially, do the job very well, get paid the most, and make sure that you do it as efficiently as possible, reducing costs. Then it's a case in which you will come out on top.
So you're basically saying solvers and searchers have the same skill set?
I think it's the same thing.
I would tempt to disagree. I think in the short term, certainly, and you do see that in the competitions as well, that a searcher type of setup and behavior works short term. But I think we're still very much in the short term. And if you look inside of solver teams who are trying to scale, then that might have a limited runway, that approach. Right, so I think there's a common meme that the worst code is written by searchers. You would never ever want to work on that code base with anybody else. I think that is incentivized. It's almost has to be that way, otherwise you're not fast enough. But this breaks down if you want to be a solver for solving infrastructure in the long term. The simple challenge of, for example, going to multiple chains and solving cross-chain, but not even solving cross-chain, just solving on multiple chains, like 5, 10, 15, 20 chains, it will not work if you approach it with the searcher's mindset. So I think there is definitely some limits to that approach, and we are approaching it definitely differently because none of us, or too few of us, would fit that searcher mindset and that approach to software development. And we approach it very much from a long-term perspective of building infrastructure that is extremely reliable so that it scales. And we think that in our mind, this is the only way to provide a service that's useful across all relevant chains and all relevant applications. Sure, it's a bit more effort, but if you want to provide long-term positive sum infrastructure, then I think that's the only way that I know how to do it.
So you think there's some like crossover between the role of infrastructure and the role of solving?
Oh, 100%.
Okay.
So we're going through, everyone is going through the pains of integrating every protocol, and there's some protocols that are hilariously difficult to integrate. I think we all know them. And you need to find ways to abstract this. Otherwise, you are never, ever going to scale to 10, 20, 30 chains. It will just not happen. So yeah, investing to abstract these high effort parts of the infrastructure, like integrating liquidity sources, I think is worth it in the long term. And you would not build an SDK, an integration SDK, for example, and open source it. You wouldn't do that if you're in the searcher mindset.
Yeah, just to add to that, I think we've seen the market structure of what makes a good solver change quite a bit as order flow landscape has gotten more sophisticated. I think early instantiations were purely aggregation, and then as you start to have more actors, it was a combination of aggregation and optimization. And now I think you can throw in aggregation plus optimization plus infrastructure. And I think that you need all of these three things to be competitive as a solver today. I don't think you can just be really good at any one thing without the other, and infrastructure is becoming central to a lot of the stuff that we're doing on the solver side, whether that's liquidity sources, whether that's latency optimization. Like the game has evolved considerably compared to earliest days of MEVGeth. So yeah, I would say there's some differences there.
I agree in all this in terms of what's playing out in practice, but not necessarily in terms of what's ideal. I think ideally you do want to separate the roles of infrastructure, solving, liquidity, users and applications, and you get the most efficient market structure if you can separate those concerns well. But yeah, I do think in practice we are seeing these things combining, which is the key point of centralization, right? If you combine capital and searches, you get market makers that have a huge edge. So it's every time you combine two of those concerns, you get some level of centralization.
I agree with this a lot. I think a lot of it is really around the market growing and with that specialization growing. We started the DeFi aggregators with the 1inches and 0x's, right? Who basically wrote a solver, but that combined with an app, with the order flow they generated and things like that, right? Whereas now we moved one step further from that in the place where solvers compete to provide that best outcome, to a user on the and we're gonna that's how capitalism works. That's how the economy works. You go further to sophistication and specialization, and this is where I think I work with various solvers a lot, and this is why I think solvers individually, including the top solvers who are extremely competitive, have actually very different vision for their businesses. Some of them want to be more and are already more like searchers, and some of them are more like infrastructure builders. So I think it just demonstrates that perhaps the definition of what a solver is too generic right now, and it's just basically someone who will be further, not fragmented, but kind of specialized into individual roles.
Yeah, I think this touches on one of the biggest dangers of designing around MEV, which is like that of cooperative extraction. This idea that like one MEV extraction strategy or one solving strategy benefits from another strategy. Like say, if I'm doing block building and I'm doing arbitrage at the same time, I combine these things, like make even more profit. And as much as possible, you want to prevent this cooperative extraction from happening. Like whenever you can isolate the advantages of different types of solving from other types of solving, you get a market that is like has lower barriers to entry and is more efficient.
Yeah, I think one of the things with this, transaction supply chain space is that it's so reflexive that when one person does something, it becomes the market structure almost immediately. Like we saw that block building as soon as sort of like subsidies began, then everybody had to sort of have subsidies as a part of the stack to become competitive. And in theory, I agree with you that we do want to see some kind of specialization across the stack, but at least right now we're seeing quite a lot of integration within the stack, and then therefore that's become the market structure. Although I will say the sort of data is different for different platforms, like Uniswap X versus CowSwap. CowSwap does tend to show you that you can have different solvers doing different things and being competitive, whereas in Uniswap X, I don't know, haven't investigated fully as to why you have SEP and Wintermute winning all the order flow, but yeah.
I think it's because you have this integration between the capital and the solving. So like solvers bring their own capital and they have this like massive edge with capital, but really like solvers are just like taking capital and offering yield. There's no reason that capital couldn't exist on chain, for example. And that's like a great example of how like if you can isolate the solving from the capital, you can take away that edge that market makers like SEP and Wintermute are currently enjoying, and you can commoditize them. And commoditizing solvers so they just become a resource that you can harness is like the key to efficient market design. If you don't do that, then solvers have a lot of power. When solvers have a lot of power, you have a problem. I say this as a solver, like we shouldn't have choices. We shouldn't be able to consent to things. We should be like a resource that you harness with the way that you design a protocol.
But I guess one interesting sort of fall from that is the case in which the sort of use of capital is there in order to essentially trade risk. Very much, of course, when it comes to, let's say, a centralized exchange, decentralized exchange arbitrage, very much you're sort of using this sort of capital in order to essentially play this sort of non-atomic risk that you sort of get in terms of trying to pick up a price of a Binance or Coinbase, and then afterwards then arbitrage that against a DEX such as Uniswap or SushiSwap, and very much you're playing that game, of course, of risk. I guess for like, let's say, same chain solutions like CowSwap, or 1inch Fusion or Bebop, of course, very much it's the case in which there it's very much there is sort of minimal risks, and that, of course, really is just a matter of making sure that the protocol, in a sense, works and doesn't have any sort of smart contract sort of bugs or whatnot. I guess there is, I think, it potentially could be the case in which we've still yet to essentially see like this sort of decoupling, essentially just because of the fact that capital really is a nice intermediate solution to essentially being able to solve amongst these different ecosystems and be able to do so in a way that is composable and essentially is zero risk essentially to these different solvers that want to participate in these various different systems.
There's like a trust issue, right, in decoupling the capital. Because like the trust issue now happens off-chain. Like Wintermute makes a contract with me and I give them capital and they give me yield. And like on-chain, I have to decide like who to trust because they could rug me. And you can build some constraints into the protocol, but like there's always going to be some trust model involved. But I don't see why we couldn't just have a simple trust model to start with of like, these are the like market makers you can choose to delegate your funds to. You just like trust which ones that you'll delegate to, and the funds go in the vault. This is what Hyperliquid did, right, when they started their protocol.
We already have some early versions of this, right? I mean, I think there's a couple of solutions coming out this summer that will go in that direction. One that we saw since last year is Balancer reducing their fees by 80% for solvers, right? They're trusting all CowSwap solvers to act not against the protocol and not trade on their own book, and only trade users swaps that were submitted to CowSwap as part of the true batch auction. And they're trusting all solvers who are whitelisted by CowSwap to execute trades at 20% of the normal fee. So I think we're already starting to see that, and I think the DEXs that are going to come out this summer, they will make much more use of this.
I think in terms of capital, and I used to work at Wintimute, right? So it's always great to participate in these discussions. Kind of taking a side step to this, right? So we're talking about private liquidity, so literally some coins that sit in a smart contract wallet of a market maker. And so that's one way to route an order. Another way to route an order is to route that to an AMM. And of course, this year we see so many new chains coming up, L2s, L1s. I talked to a lot of them, and the main metric is TVL. And of course it is. However, it is the antithesis to capital efficiency. The more TVL you have, the less capital efficient the trading is, right? And so, when we talk about the power of own liquidity, it's not about it's not that easy to replicate, right, and to create necessarily a very dynamic and a useful lending market for that to automatically happen on chain, right? So I think it's a bit, maybe we're going to talk about something else that's going to bring me back to that point, but it's just something that I wanted to mention. And specifically, the thing that just keeps coming to my mind about such a contradiction between the main metrics of chains, which is the TVL, and the fact that actually for professional traders, this is the least useful metric.
Yeah, but I also think that we're a little bit premature in assuming that on-chain capital is inefficient. And that we even need professional traders to the extent that we have them today. But I don't want to...
This is a capitalist world, so...
No, go ahead, yeah. Go ahead. If you have a response.
I think I don't think it's the question of whether we I don't like to play God and say, oh, do we need them or not? If they exist and they make money, that's for me. That's all I need to know.
That was awesome. We did cover 10 questions in there. I do have a question for you, Nathan. As you mentioned, you're building a high-speed prediction market now, and having been on the other side of the MEV game for a long time, how do you think about routing user order flow? What does that look like to you, and then to some of the other panelists as well?
When you say routing user order flow, you mean the need for the market to compete for user order flow from aggregators?
Yes.
Yeah, an essential an essential component of what you want to build. But I think the most important thing is just can you commoditize the market makers? That's kind of the most important force that you need to work on with any sort of protocol that you're building. It's the untapped kind of force that exists right now in the supply chain. And if you can commoditize market makers, then you can bring more efficiency to the user, and you're going to get more user flow that way. I think this game of can we play with as many aggregators as possible is kind of short-term thinking. It makes sense in today's market, but I think in tomorrow's market, it's about what can we do to commoditize market making. There's all this lost value there. Can we bring that back into the user? It's sort of it's the last bastion of untapped resource from the MEV supply chain perspective.
Nods from everyone.
What do you think, Taker?
I definitely would agree that. I think that pretty much it's a case in which we're seeing a lot of initiatives around application-specific sequencing, being able to essentially commoditize essentially the market maker, essentially who gets essentially order flow through various different auction mechanisms. There's some different research bits about order flow auctions, some around essentially being able to also diffuse it in various different ways to various different, let's say, block builders in the Ethereum sense, in a PBS sense, or very much to various different private mempools in order to find ways in order to capture value essentially. But very much it's a case in which we're seeing that for a lot of applications that really it just makes sense in order to try to capture as much of that value back essentially to essentially yourself as an application, and then eventually pass that on back to essentially users.
Yeah, I completely agree with the focus or direction of commoditizing market makers. I feel that that is one of the biggest sources of friction, of remaining sources of frictions that we have. And today, really, market makers are not market makers. Today, market makers are mechanical arbitrage execution engines that take a little bit of risk, but in TradFi sense, they're not really taking a lot of risk. Or said in another way, they're just an expensive oracle for AMMs.
They're the last people with any power that we have to kill in the supply chain. Like we've killed atomic MEV searchers, we've like killed CFI DeFi. Like they're the last people standing.
Yeah.
If we kill them, then we've truly like.
I don't think we should
MEV.
kill. No, I don't think we should kill them. I think we should just incentivize them to do their actual job, and the actual job of a market maker is to internalize true market signal into the price, and this is not happening much today. Right, market makers should build predictive models. Market makers should read signals and interpret them into price. What the main job today of market makers is to arbitrage exchanges, which is, it's a commodity service that should just not exist, and we shouldn't pay for it so much. Currently, LPs are just paying for this extremely $1 billion a year oracle that we could reduce to like.
So they should be paid to develop predictions.
I think one of the early signs of encouragement in terms of the market makers doing what a market maker is supposed to do is the work that we do. So I'm going to do a little bit of shilling. But what we're seeing from an application perspective, especially on Ethereum and the L2 sort of landscape, is that applications are actually hungry for wherever users' liquidity is. And bridges are not quite cutting it, even if you stick in sort of like a bridge aggregator and you have like 4 or 5 minutes to find that liquidity to fill the order. It's not been enough. And you've seen architectures like Across do really well. Sort of Uniswap X cross-chain is modeling itself around that. And that actually is like, I would say, the part that we haven't got right with that architecture is the auction itself, because the prices are being set by the front end, and generally speaking, there's competition on latency. There's no competition on price. There's a lot of things that we would be happy to pass back to the users for a lot of this cross-chain filling that we're doing. But that starts to look a lot more like market making and a lot less like, hey, let's pray against LPs on L1. And as we start to see more liquidity move, especially on the trading side, to L2s, I think this is a good early sign of having someone like a Wintermute and telling them, hey, stop doing startup, start doing this instead. And they've been filling on DLN recently, and yeah, taking on sort of price risk on these assets that are directional in nature and filling users so that they can go faster and do what they want to, which I think is good market structure as we go forward.
Yeah, I think the thesis, the idea, this sort of ideal is, of course, very much aligned, but of course the sort of models that we're working with, I very much agree with you, Markus, in terms of essentially that's very much that we're sort of operating too slow, perhaps, maybe we need shorter block times, maybe, or maybe we need market makers in order to be much more proactive than they are now, compared to that of essentially the sort of dumb AMMs that we have essentially on-chain right now. I think very much it's a case in which I guess there is something to be said about the fact that I guess this sort of intermediate solution, essentially, of these different sort of market makers, trading firms, sort of helping to synchronize the market by pulling in prices from Binance or Coinbase or even other chains or whatnot, is a nice sort of remedy for that in the short term. It's definitely a case in which, of course, I definitely do agree that it's a sort of subpar solution, but that for the moment here, that very much it's a sort of solution that helps to essentially emulate and synchronize essentially markets and sort of bring them in line, help to get much more better prices for, let's say, the sort of swaps that you do in cross-chain, or even for like exchanges that you aren't able to easily access because maybe perhaps the exchange is banned in your jurisdiction, or there's some sort of regulatory essentially like sort of thing stopping you. So it's very much a case in which there is, of course, like some sort of course, some sort of regulatory arbitrage or some sort of course, benefit that it is luckily sort of offering this sort of market making between, so this sort of trading and sort of searching, searching across these different dexes and picking off these different prices. and that, in a sense, it's a sort of nice solution for the short term, essentially.
Go on.
I just wanted to go back to TradFi because that's where the term market maker comes from. And really the key and the key role in the ultimate definition of a market maker is someone who is there in the market to buy and sell when takers want to do that. And that is that spread risk ultimately that market makers have. And I think saying that market makers need to be running predictive models or kind of using their internal pricing systems to sort of make this into an oracle for the market. This might be happening by virtue of their activity and how they're doing their job, but ultimately the key purpose of them is to be there to buy and sell, and this is why the AMMs are called automated market makers, because by the way they're coded, a user can always come in, buy and sell, and I think that is ultimately the to commoditize market makers. That is something that would need to be done, and AMMs did do that, right? And from there now, they commoditized, basically they created the DeFi market, right? And then the market makers came into that because they believed that, and they proved in a number of cases that they could do it better, right? So I think the market makers are already commoditized, and more systems will, or kind of the market is much more open. And from there, we just have the competition of what means of market making wins that.
I think I don't actually like the idea of market makers as oracles because it feels like you're giving them like another edge. And that is actually, I believe that capital is like the edge that they have right now, but like information is like the most difficult edge that they have to overcome. It's like they bring their own information, they bring things from like proprietary sources. How do you bring that on chain? To me, that's actually the hardest problem to solve in commoditizing market making. Commoditizing the capital is like an easier problem to solve. Long term, how can we commoditize the information so we can just treat them almost as like the quant to the customer's business model that a lot of TradFi has of like, okay, you have alpha, here's the resources to execute your alpha. I like the idea of like seeing market makers that way on chain. Like we have the information, we have the capital, we have the the architecture for you to do the execution. You just bring your alpha and we're the platform that you execute your alpha on.
Yeah, absolutely. No, I'm not saying that market makers as integrators of signal should be any sort of like oligopoly. It absolutely has to be commoditized, and anybody should be able to bring their alpha and execute on it easily. I think the view that we have that market making is something that should be done by specialized teams comes from TradFi. And then in TradFi, it's sure capital is one requirement, but I don't think it's the most restrictive requirement. I think the most restrictive requirement coming from TradFi is actually latency, and latency as an important factor for competitive market making is only a result of market structure. Having time-based execution, having continuous time-based execution forces you to have this structure. And if you don't have that, which we don't natively actually have in DeFi, then I don't know whether we would even have market makers today if there were no off-chain exchanges. If there were no continuous order books out there, I don't know if we would have market makers as we have them today.
So you're saying it's just like a function of like the execution quality on-chain not being the same as the execution quality off-chain. And if we can fix that, then we can like fix the problem.
Yeah, if we can remove all continuous order book settlements and agree on a single block time, we would probably not have market makers. We would only have signal traders.
I think the infrastructure has a little while to go to catch up. I mean, infra guys, you've been developing for like 3 years. Like, come on.
We just need more regulatory interventions for the centralized exchanges.
So in our last 10 minutes, I want to shift the conversation a little bit. We've touched on a number of points. Where do you guys see the future of the space going with solving, in particular cross-domain solving? I know there was a great Twitter Spaces, I think that Katya, you hosted not too long ago, with some folks that were on here. Markus, I think Kata from Enzo was on there, some other folks from CalSwap. And you guys talked about some of the challenges of cross-chain solving today, and I think you alluded to it earlier, Markus, in terms of integrations are difficult sometimes. Where do you see the space going? Is that feasible? Is that like a 1 to 3 years thing or further out on the horizon?
Even right now, like Across as a bridge is doing like interchain solving, right? It's like the exact example of like what we're talking about. Like the future of the market, I think I'm very bright about it because we're not stuck in some kind of inadequate equilibria. I'd be depressed if we were. Yes, like it's very complicated at the moment and the complexity of the market is blowing up exponentially, but we're like always moving, we're always developing. Like nothing's stuck at the moment. So I do see a world in which market makers are more commoditized, the value goes back to users, we have a retail of useful ecosystem products that we build on top of the services that market makers offer. And yeah, I'm very optimistic about where the space is going.
Yeah, I guess I'm not sure if any of you guys are doing cross-chain solving, but we've been basically doing that for the last 6 weeks and have done decent size, enough to reveal that it is quite different in terms of its risk profile. And the sort of game is now slowly going back to a latency game because there's inventory risk here, and ultimately the auctions are designed around foot races. So your spread is the same. You don't get a chance to compete on price. You have to compete on latency. And I think that's something that should definitely go away. You should be allowed to sort of give users better execution quality even as they go cross-chain. The other thing is on the infra side, L2 RPCs are still comical points of risk for double filling of intents on these bridges. And I can say that having experienced the worst end of the stick with some of that in the first version of our filler. And yeah, I feel like at this stage, that's kind of inexcusable. I think we have to do better. I mean, we have so many circuit breakers in place to do that. And then the other thing, which I would say from an evolution standpoint, we haven't got to on-chain at all is just, we talk about yield in terms of ETH terms, but like ETH in some cases can fluctuate a lot within that time period that you're getting rebalanced in, which is considerably different compared to like being an L1 solver, being a single chain solver. We have to wait from anywhere between an hour to 12 hours to get rebalanced. And that's quite a lot of directional risk that you take on even an asset like ETH. If you start to move into sort of like holding other inventory, you can't really pull off a Jared strategy cross-chain because that's just too long to be holding an asset that's that volatile. And so I think there's like rebalancing, commoditization, like the stuff that Everclear is doing, which is pretty exciting. I think that should hopefully help us effectively have a go-to-market solution for composability that's not at the sequencer level, which is what these intents are. And I think it's great because it's allowing us to really explore what this whole thesis around composability is without having to have any political intervention at the sequencer layer or the base layer. Or, a lot of this implementations we're talking about that haven't quite materialized, we've sort of seen that happen. And that ultimately should help us congregate on like applications that can tap into a global pool of liquidity, regardless of what chain. But yes, you need infrastructure to sort of like protect fillers from that directional risk, especially if it's their own inventory.
A few comments have been made here about like it's bad to compete on latency. Why? I mean, that's giving users faster inclusion, right?
Well, it is giving users faster inclusion, but the execution quality here for an ETH to ETH bridge, if you can give 5 basis points back to the user, I would imagine like on 450 milliseconds versus giving 5 basis points back to the user, the trade-off is not too bad.
That's what intents are about. What are you optimizing for?
Yeah.
It's all about the
always
intents at the end of the
between
day.
price and immediacy. But when we talk about in the L2 landscape, we're not talking about 10, 12 minutes here. We're talking about milliseconds. It's auction design that's designed to give users fast inclusion regardless. Because I'm not asking for a 30-minute auction. I'm asking for the opportunity to basically within a 2-second time period give 5 basis points back to a user, because then you don't have such a lossy infrastructure for composability. Like this is quite lossy, by the way. We make anywhere between 5 to 16 basis points per trade for like ETH to ETH stuff. That shouldn't be happening. And the auctions don't give us an opportunity to internalize some of that and give it back to the user. So I would want for that to happen.
Yeah, I guess whilst we have those sort of poor solutions out there, stuff like, let's say, composability, not yet, we haven't exactly achieved that. Of course, there's a couple of different sort of solutions out there, like Aglair, some of the stuff that the NodeKit guys is doing as well, Javelin, as well as, essentially trying to essentially make use of, let's say, Polygon ZK EVM as well. Pretty much it's a case in which until we essentially see like complete solutions, that very much still be risks that very much will still exist in some of these different ecosystems, whether that be finality, whether that be essentially lack of composability, where essentially the fast path, it just makes sense essentially to have this sort of agent, a solver, in order to essentially fulfill that sort of role. And that very much, whilst essentially these sort of different like sort of solutions, like whilst these different sort of protocols, these different sort of means that users wish to interact on-chain sort of grows, that essentially some of these sort of risks become a bit more apparent, and essentially we need to find ways in order to underwrite it, essentially. And so ultimately, I think I definitely do believe that essentially we'll see various different sort of solvers, whether they'll even be called solvers in a year from now, pretty much exist in specializations where essentially they're there in order to sort of underwrite this risk, or very much essentially fulfill a sort of computational role. And of course, for some of these, whether that be in the proving ecosystem or ZK ecosystem, of course, they might be categorized as, of course, provers. Others, it might be a case in which we might see them as sort of operators for AVSs or whatnot. But essentially, I guess depending on, of course, your sort of definition of solving in a year's time, that very much we'll see various different agentic sort of actors out there, very much fulfilling all sorts of these different roles, essentially. And if cross-chain essentially is still how it is right now,
Cross-chain beyond Ethereum, right?
Yeah, cross-chain. Depending on how cross-chain will be like from now, essentially, that very much it's a case in which we will probably still see essentially very much solvers still plugging in the holes, pretty much plug and making sure that the boat doesn't sink, or making sure that the experience isn't subpar to be able to achieve that.
I think we have to be careful with the term cross-chain solving, so that we don't call it into existence, because I don't think we really should have cross-chain solving, because again we will have this. A cross-chain solver has many different roles to fulfill, right? He has to have liquidity, he has to solve on across liquidity on one chain, he has to bridge, he has to then solve on the destination chain. These are too many roles. They're again vertically integrating and centralizing. And we should really fight for having the composability from the start. And I think we do, and like many solutions do have that. And I think many assume that there will be these cross-chain solvers, of which there are actually very few. There are resolvers who just bridge certain tokens, and then there are solvers on source and destination chains who route the tokens, or routing aggregators. And I think that's how it should continue to be, and this should be the most competitive approach. Because that is also the easiest to commoditize. Then you can commoditize each individual step and provide LP liquidity possibly for taking on the finality risk, and then provide other sort of liquidity for providing the routing assets.
Yeah, there's a really nice definition of solving here, I think, of being someone who's paid to take risk. Whenever you have some kind of protocol design where there's an element of risk and you need something to price that risk, like having a market of solvers, that's the most appropriate way to have that risk priced.
Interesting. I would never have picked that.
Well, it looks like we're almost running out of time here. I want to say thank you to the panelists. You guys made this incredibly rich, also easy to host. You had a lot of things to say, so thank you. I definitely look forward to going back through the recording and taking a look at this. And hopefully everybody in the audience got a lot out of this panel. So thank you. Give it up for the panelists.
Thank you.
We do have time for one question. If anyone has any question, you can raise your hand.
Make it spicy.
Nothing spicy. Oh, 1 minute.
Oh.
Spiciness.
Please spicy.
Hi. You mentioned that block builders are basically the solvers, and we see today that in Ethereum it's basically controlled by 3-4 companies. How do you see this being more decentralized and not have a centralized risk on the Ethereum?
This is a perfect example of cooperative extraction leading to oligopolies in the market, whereas the top top, I see building as like a solving activity, and the top builders are solvers. They're doing CeFi, DeFi trading and market making, and they bring their own capital, and they have cooperative extraction with other strategies, and they sign like business deals with like order flow providers. And like this is like exact example of like the market structure that you want to avoid. And I think that the key reason is because you have, to a large degree, you have builders bringing their own order flow to the relays, and the ideal market structure would be that you commoditize them, and the relays bring the order flow, and they provide it to the builders and solvers who just have like a more simple task of like, yeah, solving and aggregating that order flow. It's a mistake to have them bring their own order flow. And this is like the fundamental design flaw with like PBS, which has led to the oligopoly that we see today.
I think I'm in an interesting position with Bebop, where we actually, for every trade request a user makes, we run in parallel the private market maker order book, RFQ, and the solver auction. And it's actually been interesting to see, we've done it for about 6 months now, and it's been actually very interesting to see who wins where. And it's extremely dependent on which chain you're looking at, especially if it's some new L2, where it's very expensive to bridge. On-chain solvers are actually much more competitive than market makers. It also heavily depends on assets, things like, wrap BTC, ETH, and things like that, of course, are extremely liquid markets, and that's why we see a lot of edge from the market maker side. So, and the reason I'm bringing this up, right, is that ultimately a solver auction right now primarily is a price auction, right? It's not a latency auction, it's none of those things. It is, like how much output can you bring, and that's what happens. And because it's an open market, we can't really go and say, hey, Wintimate, hey, SCP, hey, anyone else, come and you can't build a block builder, you can't do this or that, right? I think ultimately this is the system by design where anyone enters. But at the same time, and I think you mentioned one of the solvers, Copium Capital, in some of the questions that you were suggesting. And I think, they really came kind of pretty much out of nowhere and became a very competitive player on CowSwap very, very quickly. And I think that actually shows that with the market makers and any other players who have all this call it oligopoly, all this presence across the entire chain of events. You still see entrants who come in at very low cost of initial setup and really use their intelligence and energy and enthusiasm to break into this market. And I think that's the beauty of this market. And different actors are going to do it, and some of them are going to be better than others. So that's my take on it.
The builder markets.
Oh, no, you go ahead first.
Actually, when I look at the builder market structure, I feel more hopeful than this being an example of centralizing forces. I think that actually it's quite positive to see a builder, Titan in this case, without internal liquidity and without their own SexDex ARP team to be so competitive. And if you talk to the other two teams, you actually, what I've been hearing in anecdotes is that they're much less integrated than you would assume. They actually don't do codependent building, where the builder depends on what the searcher knows. But these are just actually what led to this oligopoly. My understanding is that you have economies of scale to attracting order flow. And the real problem is that you don't have a single source of a single RPC that anybody would send to get their order flow included, to only supply to trusted builders. And this market design limits the accessibility to new builders entering the market, because until they have a critical threshold of all the order flow providers, of which many are searchers, they can't really fully compete. But if you have this piece of infrastructure, if you have an SDK that automatically only submits to trusted builders, then you will have a much more competitive builder landscape.
Yes, but I mean the key edge that Titan enjoys, right, is that they like have their own order flow that like other people don't have. So it's kind of like they still have this edge that they're bringing that like no one else has, that no one else can compete with. Whereas like other builders bring like the capital or you know there's always that sort of like cooperative element where there's like these things that you want to like separate. And like whenever you have the builder or like the solver like bringing some edge like that to the market, I think like that's a problem. And even now, like there's sources of order flow where as a builder, if you don't have them, you're relegated to like 0.1% of like blocks, like no matter what you do essentially. Like you need to like get certain levels of order flow just to compete. And like it's true that Titan have like done this amazing success without like having capital as an edge, without having cooperative extraction as an edge. But I still think it's like not a good edge that like the order flow is their edge. And then we should still be like looking at ways that we can like separate that edge.
Yeah,
All right, that is the end of the Solver Games first edition. Thank you very much for a very spicy Solver game.